General observations: trading is often highly range-bound, with periodic accelerations that often last for a few weeks, before returning to relatively low and/or slow activity. A fairly ordinary reversal off long-term support is revealed to take place from an inverse head and shoulders with a declined neckline. This formation would have been quite difficult to spot for most due to it being compact and slanted. In any case, it leads to an aggressive uptrend. The earlier regular downtrend lines provide identification of the uptrend's progress as it rises into the new year. Even though there is no volume, there is clear bullish strength with rows of large green real-bodied candles closing over the neckline and regular downtrend lines. A decisive downswing forms a gradual downward slope to begin a likely return trip back to the inverse head and shoulders range. A downtrend line can be highly useful in the likely event upswings appear along the progressing downtrend. This current downtrend will of course get bearishly overextended if it stays on a near vertical drop for too long. The overall reversal range is a flat top ending with a downward slope. Even though it didn't end up being a double or triple top, the range has a clearly defined upper and lower boundary. Downtrend lines prove to be extremely accurate from a long-term view, as they even run directly through the open and close prices of the early 2020 bearish reversal. This intersects with the clear horizontal resistance range for additional bearish context. More recent 3 methods rising price action helps the early uptrend overcome a defined resistance range. While this wasn't a strict ascending triangle in the context of continuing an uptrend, the overall price action does have many analogous features. The major downtrend line retains high validity, as the uptrend begins what is turning out to be a failed re-entry into a previous long-term range. Uptrend lines from the general ascending triangle price action are also very accurate as they identify key upswings. While it would be helpful to draw levels from the double top range, the 0.67 level is more than adequate in identifying current resistance with high accuracy. This exact level has greater significance, even compared to the double top, as it has proven to have long-term influence. Also, it is still technically within the lower boundary of the double top, that is defined by its minor upswing. Similar to the invalidated descending triangle from the eBay example, this double top is less precise due to high volatility. After a fragile break over 0.67 and the upper boundary of the double top range, the market accelerates from the steady incline of the lower uptrend line to encounter natural resistance at the 0.6870 level. In the process, this reveals the general outline of a failed head and shoulders. This, like other examples, may have been harder to spot during its development due to the abnormal pairs of downswings forming each section of the pattern. Also, like other failed bearish patterns, it does present a clear gradual incline as the right shoulder rises in October. That gradual upward angle is a key factor in many failed head and shoulders. In both these cases of less strict patterns from the general ascending triangle outline to the abnormal failed head and shoulders, there are neat upward channels to end the patterns. Just like candlestick charting, it is often more advantageous to hold a general perspective of price action, formations, and features, rather than trying to adhere to strict pattern criteria all the time, without any discretion or flexibility. This example provides a good demonstration where a failed bearish reversal pattern acts as a resting phase in a bullish continuation. This also highlights a rare case where A highly valid double top only produces a small drop despite heavily bearish context. This is due to strong support from what later became the neckline range. The intersecting long-term trend lines at the end of September also illustrate the transition from a major downtrend to the continuation of a major uptrend, in a similar style to the display of a moving average crossover. Such an event is rare and is not a primary part of analysis. This is just an interesting case to highlight. Also, in the event the head and shoulders was identified during its formation, the failure of a bearish reversal could have been identified early, as normal variations of downtrend lines from the head and right shoulder downswings were quickly surpassed when the right shoulder began to incline.